Okay, so this next video lecture is still the continuation of our Module 8, okay, for Financial Reporting System and Management Reporting System. So we are now in the second topic, which is MRS, or Management Reporting System. So MRS, this is a part of a management control system. So it will provide the management or the business the information, specifically financial information for decision making. So this information can be in the form of reports or financial statements. This is also designed to assist members of management to provide timely, pertinent information. Okay? So MRS system help in capturing data needed by the management to run effective business. And the data provided with this system could range from financial data, even non-financial data, such as employee count, client accounts and products, client assets in custody, in investment performance, and others. So the scope of MRS is very wide. However, there are 6 reasons why an enterprise needs an effective management reporting system. Okay, so here, since MRS is considered to be vital, so therefore, management or the entity really needs to have effective MRS. So because in this case, the management or the entity constantly need reports for decision making and for the analysis of trends and other financial analysis, again for decision making. Another reason for having MRS or effective MRS is reports that are unavailable, or reports should be available with the right stakeholders at the right time. Because in this case, most likely because of many activities in an organization, reports may be unavailable to the stakeholders at the right time. So to address this problem, effective MRS should be implemented. Okay, again, stakeholders also needs reports for decision-making purposes. Another reason for having an effective management reporting system is because of lack of visibility and a single holistic view of the enterprise performance. So again, with the help of effective MRS, it can be or it can aid the management in visualizing the view of the enterprise performance timely. Okay, so that's the purpose also of MRS. Another is because of data redundancy, duplication of data that leads to data management and quality issues that will also lead to error prone reports. So therefore, to address this problem, MRS should be effective to avoid these risks. Another is the entity have high value resources, so they need to have an appropriate management over these resources. So MRS will be of great help to the entity in this case. And changing a global report to fit local needs. So the management actually face this dilemma because they have to be to meet the changing global requirements in reporting, but they are operating locally. So to address this dilemma, again, effective MRS should be implemented. Okay, so therefore an effective MRS will help improve decision making, management effectiveness, responsiveness to the issues, and also improve efficiency of resources in the delivery of organizational services. That's why MRS is very important. So traditionally, MRS system were only used to pull up information. Before, this is just the purpose of having MRS. However, as the system has undergone tremendous transformation over the years, and making it a robust platform for reporting and management. Okay, so due to the advancement, of course, of the technology, it can now provide financial and even non-financial information, which is a great help to management. Okay? Necessary actions to control also the business activities and of course for decision making. So traditional bookkeeping activities can now be automated. We all know that because of IT. So the system plays a great role in helping management take good business decisions. So it will help them in, especially in identifying the problems, to evaluate our alternate solutions, implement the best solution, and of course review the implementation for feedbacking and for continuous improvement. So relating to our MRS, so what are the essentials of an effective MRS? Basically, MRS should be able to generate good reports, and they should be generated in a timely manner that should have a proper flow of information also, and could be correct in format. So here, the first essential of an effective MRS is the system should be flexible to adjust to all requirements by the users, because this will provide insights if there are any deviations from predefined standards or estimates. So it should do all this while being economical to the organization, meaning localization of reports helps in keeping them simple. That's why it should be flexible. Another is enterprises should also concentrate more on localizing in relation to the first one, their MR system, as it simplifies reporting. So this will help in taking better decision for each area or domain. So meaning lesser complex reports, and easily the reports generated can be easily understood and interpreted by the different users because they use it for decision making. Another is an MRS is expected also to be accurate. Of course, there shouldn't be any discrepancy, especially in reporting. So the system will evaluate a company's result at any given point in time. Therefore, they should be accurate. So the reports that are generated by the systems will be used by the users, such as the senior management, more so the C-level, meaning the controller, the top management executive. Okay, so here therefore the need for accuracy is very high, because again it will make or break a success for decision making to be made by the top management. So it should be accurate. Okay, a management also, or an MRS is only effective when it promptly generates reports. But if it doesn't produce reports when needed, there is no point, of course, of having this system, because this is the very essence of having MRS. But with the help of technology, this is available, so the enterprise can obtain information faster and more often. So thanks to the technology, which aids our MRS. Another is a crucial factor also for any management reporting system is for it to be cost effective. So the management in implementing MRS should weigh the cost and the benefits. So meaning every time benefit should always outweigh the cost. Okay, so the reports from this system should never be too difficult to assemble, and they should be able to justify also of having a greater cost. So being cost effective can be also the deciding factor for enterprises for implementing MRS. Another, ultimately, reports that are generated from the system should help the management take informed decisions. Meaning, the reports should be detailed enough to let the management know where the next change should be. This is very important because the management relies on these reports for decision making. We have been mentioning this for all throughout our discussion. Okay, even the FRS, not only the MRS. Okay, another, there will be a constant need among executives to obtain the newest information in the most detailed and convenient way possible. So thereby, based on the ever-changing parameters, new reports should be proactively created, or the necessary changes must be done to the existing reports itself. Because in this case, any changes that happens or occurs must be reflected, because this can be relevant in the decision making of the users. Okay, another is an automated delivery of reports, both static and dynamic, based on the organizational hierarchy levels is a critical contributing factor for the success of our MRS. Of course, okay, because again, as mentioned earlier, about the automation, there might be some bypassing of human intervention, and audit trail will not be implemented. So there is a possibility of risk for error or even fraud or manipulation. So that's very important that organizational hierarchy level, or the authorization and the controls as well that is implemented should be effective. Okay. And finally, an effective MRS should maintain a high level of consistency in terms of reports, look and feel, and the technology, tools, and the processes used for all of the reports to maintain uniformity, and also the reports can be compared, okay, from the previous period for decision making again purpose. So those are the essentials of having our MRS, and for it to become effective as well in implementation. So we go now to responsibility accounting. So basically, we've mentioned responsibility accounting as an important area also of consideration, because here financial reporting system and management reporting system will be drawing out the data or input, okay, in processing the transactions or financial transactions for reporting purposes. Okay, so we will have a short overview of responsibility accounting. Actually, responsibility accounting was discussed in your strategic cost management or even management accounting. Okay, but to refresh you with the idea, so let us discuss it briefly. So responsibility accounting, this involves a separate reporting for the revenues and expenses of each of our responsibility centers. Doing so improves the management operations. Okay, for example, the cost of rent can be assigned to the persons who negotiates and signs the lease, while the cost of employee salary is responsibility of that person's direct manager. Okay, meaning we segregate the entity will segregate the authority in each responsibility center. Okay, so this concept also applies to the cost of products. For each component part has a standard cost, okay, which is listed in the item master and bill of materials, which it is the responsibility of the purchasing manager. Okay. Similarly, scrap costs incurred at a machine are the responsibility of the shift manager. So meaning there is accountability assigned to every authority related to it. So what are the advantages of responsibility accounting? When having responsibility accounting, here the entity will be able to delegate decision making to several parts of the organization. This is what I have been mentioning earlier about segregating the authority to the different cost centers or departments or division. So the line managers, department heads, and supervisors will be entrusted with operational decisions. So the top management or the executives could then focus on the strategic or long-term organizational objectives. So segregation of duties as well, but most importantly, delegation of decision-making function. Another advantage is it provides a guide to the evaluation of performance, meaning it helps to establish standards which are used for comparison with actual results and also for giving um, uh, incentives or punishment, okay, for those cost or responsibility centers respectively. Third, it also will promote management by objectives and management by exception. So what do we mean by MOB and MOE? So we will discuss as we go along. Okay, so what is management by objectives? Basically, management by objectives, this is an approach in which a manager agrees on a set of goals or objectives. That's why it's termed as management by objective. So the performance of the manager and his or her subordinates will be evaluated based on the achievement of these goals. Meaning if they achieved this or did not. So that's how they will be evaluated. That is management by objectives. While management by exception, on the other hand, this is another managerial approach in which the management will give attention to matters that materially deviate or differ from established standards. Meaning, what they will focus is on the deviation and not on the goal. So, for example, when a department has a very high cost compared to what budgeted, so here the management will focus on finding out the reason behind it. What's the reason why that department incurred high costs? So after finding out the reason, they will fix this concern. Perhaps they will cut the cost, process re-engineering, or establish new standards and others. So that's how management by exception is implemented, which is quite different from or opposite from the management by objective. But of course, these are very important in implementing the responsibility accounting in an organization. So what are the requisites of effective responsibility accounting therefore? So we have the entity should have a well-defined organizational structure. This is very important because authority and responsibility must be clearly established and understood by all levels of management. Especially we are dealing with reporting. Okay. Another is performance evaluation measures and standards must also be clearly established so that the responsibility centers will know how they will be evaluated and what efforts they should perform to achieve the goals. Okay. And third, only items that are under influence of the manager of the responsibility center are included in the performance evaluation reports. And the manager should not be evaluated based on matters that are out of his or her control. Okay, that is very important. So we go now to the different responsibility centers. Okay, so you are familiar with this already, I presume. So basically, your responsibility center can be classified according to control over cost, revenue, and investment. That's why it's classified also as such. So the first one is cost center. So this is a subunit of the organization that has control over costs only. This center do not have the control over revenues and investment. It only controls the cost. What are the example of cost centers? Production department, maintenance, accounting, legal, etc. Meaning cost centers are evaluated using variance analysis, meaning budgeted cost versus actual cost. Okay, so that's how they will be evaluated. In these departments, they only incur cost. They do not directly produce revenue or investment. Okay, another cost center is revenue center. So of course, from the name itself, it has the control over revenue generation. It has no control over the cost and investment. So what are the department under this? Sales and marketing department. So the revenue centers will be evaluated also using variance analysis of revenues, meaning targeted revenues versus actual revenues. Profit center. Of course, when we say profit, in this case, this has the control over both our revenue and cost, meaning revenue minus cost is equal to profit. So what are the examples of areas or department under profit center or can be classified as profit center? branch operating in different geographical locations. So they both have the control over the revenues and costs of their branches or operations. So the performance of the profit centers will be evaluated by measuring their income. Okay, and again, please take note, it will be based only on the controllable revenues and costs allocated, not on allocated, costs. And lastly is our investment center. Okay, so for the investment center, this is a subunit that has control over revenues, cost, and investments. Okay, what are the example? Receivables, inventory, fixed assets. Okay, so since investment centers are given authority to decide over its investment, it operates like a separate entity already. Because in this case, it is a subunit that controls their own revenue, cost, and investment. So what are the examples? Corporate headquarters and subsidiaries. Investment centers will be evaluated using different profitability measures, such as we can use the ROI, residual income, EVA, and others. Okay, so this is how investment center will be evaluated. So those are the different responsibility centers under the responsibility accounting.